Yeah, I'm losing my edge.
It's options trading, stocks versus futures. A lot of volatility in the market, Errol, and it's not only exclusive to stocks right now. You've got currencies at extremes. We're going to talk about that. You've got metals really cooking, moving around. You've got energies at extremes. And I wanted to have a conversation today with you, someone who's been cutting their teeth in the stock options world, and talk about how not only the strategies translate in terms of like selling options, buying options, volatility and everything else, but also something that I think a lot of people get hung up on is like, if you're used to selling strangles in SPY, selling strangles in ES or MES,
very similar.
It's the same thing, right?
Yeah.
Maybe you could talk about that right off the bat.
Yeah, very similar approach. That was my thinking originally when you were talking about options on futures, because originally when I was just trading options, just getting into futures alone, not talking about option futures, just futures alone was kind of scary. So after putting on some trades with the futures, it's like the same thing with options, almost to a T.
It is the only thing that is different is like the size of the product, which is the multiplier, right? Like if I'm trading SPY options, the multiplier is 100 because it's like 100 shares. If I'm trading ES options, the multiplier is $50 times that, price. If it's MES, it's $5. Small exchange products, it's just $100 for not only equity futures options, but commodity futures options, foreign exchange futures options, and everything else. That's really the big nuance. But let's talk a little bit about the strategy piece, and let's start with something that stock option traders are probably very used to seeing, and a concept they're used to identifying: VIX. The S&P 500 implied volatility index, and you can see very mean reverting in nature. By that, I mean, it tends to hover around the same prices. You get spikes higher, you get, drifts lower, but it tends to come back. And one of the biggest strategies is selling those options when option prices, which translates to higher implied volatilities, are high. It's one of the most popular strategies, and probably selling the strangle or iron condor when VIX is high is, I would guess, one of the most popular stock option strategies, unless you either have an alternative. But I also want to hear what you think is expensive for VIX. Do you have a more popular stock option strategy, Errol?
I don't, other than a regular spread.
Regular spread, what does that mean?
Like a vertical spread. I guess that's what
gotcha.
The default spread for me.
Yeah. Essentially just taking your iron condor apart and making it a little directional. But selling premiums, selling options in the S&P 500 or other stock products is very popular because the average IV since 2015 is around 18%. The average RV, realized volatility, Errol, how much the market actually moves, is 14%. That's overstatement. Option prices tend to be higher than what the market actually moves. And that makes sense. You've got huge institutions, huge banks, hedge funds, everybody else reaching to buy call and put options against their, millions, billions of dollars of investment there. And they're willing to pay a premium for that insurance. We sell them that insurance. But the question becomes, is that strategy, is it going to work for euro, which is moving around a lot here today, or just options on non-stock markets in general?
This is where you went to the back testing. Okay.
Exactly, okay. Man. Many years of looking at the euro IV compared to euro realized volatility. And it's almost the same exact amount of overstatement, 18% IV on average in S&Ps, 14% realized volatility. So an overstatement of about, 20%, whatever you want to call it there. 8% average IV in euro, 6.5% average RV realized volatility in that euro market. It's not as big of a number nominally, but it's pretty much around the same overstatement in here. And what I actually found as well in this back test is when IV was higher than average for both S&P and euro. And so when IV in euro market is above 8%, and S&Ps when it's above 18%, the spread, the difference between implied and realized volatility actually doubled.
When it's above what again? Sorry.
when it's above those averages.
Okay.
So when you know the S&P 500 volatility is above 18%, the difference that you're getting between IV and RV, the overstatement of options, that is actually doubled. And the same went for Euro. That's just to say that high IV has yielded higher returns for selling options.
Okay, so the higher IV goes, will that increase the difference in between the IV and the RV?
Exactly right.
Oh, is
exactly.
that what you're saying?
Yeah, that's
okay.
Exactly. And so unfortunately, you don't have, you know, a realized volatility product to buy or sell. Otherwise, it'd be quite easy. And actually, big hedge funds and banks do, they're able to do variance swaps where they're able to create like bespoke contracts that is just implied volatility versus realized volatility. But what you have to do here, Errol, is just when IV is high, to take advantage of this, doubling of the spread, this overstatement of options prices, you go in there and you sell a strangle or an iron condor. And what's really nice is that the euro is the biggest component of small US dollar futures. And so you have 6E, which is the euro futures. That's, not the biggest product in the world, but it's decently large. If you want to try this out with a smaller product, the SFX options are right there for you. Implied volatility is above average. As you can see right here, we're above that average IV line. And so vol is high. And so go in there and look at selling your iron condors or your strangles and everything else, because in futures, Errol, and you can maybe end with this, the setup's the same thing, right? Like if I'm used to 16 delta strangles or 30 delta, 20 delta iron condors, you're going to see the same information on futures options as you do stocks, right?
Yeah, no, everything's looking really, and to be honest, even right now, I can't even believe I'm saying I haven't even checked out this Euro IV. Like, that's crazy to me.
You're sleeping on this opportunity.
Yeah. I just didn't know it was there. That's crazy. That's what's
I feel like that's
right
actually a lot of people's opportunity, or a lot of people's experiences is like, man, I just didn't, I thought we just had stocks, dude.
Right.
I thought we were just selling, strangles and Netflix and SPY and Apple and everything else. No, you've got these euro markets, you've got the small US dollar options, you got metals, same relationships you're going to see across the board from stocks to futures options.